right, Brian. Thanks again for your time, man. I really appreciate it. I know you're a busy guy, but I'm just gonna enjoy this conversation with you today.
Yeah,
So how
happy
you
to be
doing?
here, Juan. Thanks for having me on again.
Yeah. So we chat over a year ago. Things are comparing to our last conversation that where it is right now. I think there's some changes
Yeah,
in the market, right?
right.
So let me for the people, especially I'm trying to do these recording lives in order to show younger generations about technical analysis important on all these. So let's start with this. So tell us more about your career. So how you started and you can, summarize your career.
Yeah, sure. I'll give you the quick overview. My dad used to watch Wall Street Week, and when I was a kid, I would sit next to him every Friday night and watch Wall Street Week with him, and kind of picked up little things here and there. I got interested in the markets for my first trade really when I was about 15 years old, and the trade worked. It worked actually very well, which was probably not the best thing because I thought it's easy. Like anyone who gets their first trade and makes a lot of money, they think, hey, this is great. Why work? So anyways, I did a little bit of trading, not really much. I mean, because back then commissions were, a $5,000 trade would cost you $300 each side. But nowadays, obviously, that's changed. I went after college in 1991 and became a full-time stockbroker at Lehman Brothers in Boston. I realized I wasn't interested in being a broker because it was really just a glorified sales, job, a telemarketing job, really. So I began trading with a company out of New York called Generic Trading for, it was levered money. I opened a day trading office in Denver, back in, I don't remember when that was, 20 plus years, about 20 years ago, actually. And so since then, I've been active in the markets pretty much every single day. I mean, besides vacations and that. But I'm a swing trader. That's my preferred time frame, and I define that as anywhere from maybe one day if I'm wrong and I get stopped out. But I'd ideally like to hold a stock anywhere from 3 days to the upper end is probably about 3.5 weeks. That's really the sweet spot. I tend to get stopped out of anything after that. It's really unusual to hold much longer. So I've been doing this again full time since 1991 and actively engaged in the markets on multiple time frames and really get a good feel for the timing in that by starting out with bigger picture time frame and working on down to shorter term time frames for accuracy. So today I run alphatrends.net and I trade almost every day. So that's kind of it in a nutshell.
Yeah. So I asked this question to Jay Woods. I'm sure you know him.
Yeah.
But I think it's a really important question. So after all this, long time trading, what keeps you motivated to, look at the charts every day? What makes you motivated?
I love the game. I just really like the intellectual battle. It's about being self-sufficient, finding all my own ideas. I really don't. I never have the TV on. I look at Twitter, but I really don't pay attention to it. I'll maybe see a symbol and decide whether I should look at that or not. But to me, it's being engaged every single day and knowing that there's a scorecard to tell you whether you're right or wrong, and it's not. There's nothing subjective about that scorecard. There's no "attaboys, nice job." It's you win or you lose, and the scorecard is your P&L, and that will tell you how well you do. So I just love it. I mean, I don't know any other way to say it. That I just love the game. So that it keeps me interested.
And how you, especially nowadays, how can you focus and put it aside all the noise? Because as you know, the noise is big right now. So
Yeah.
with social media, how when you trade, so you put everything down and you just focus on the chart, or how do you approach to that?
To me, it's easier than ever to put the noise aside because I've simply trained myself over 30 years of full-time doing this to just realize that it is noise and not listen. And I, even, people always say, well, you always have to hear the other side of the argument, why someone's bearish about a stock that you're bullish in. And the truth is, I've been doing it long enough. I know my process, and I know that I'm going to honor my stop. I don't need to hear the other side's opinion. I don't need to hear one person tell me why they think I'm wrong, or 20 people on Twitter gang up on me if I, don't like Bitcoin. In fact, it's probably the opposite, that, if a lot of people are saying you're wrong, well, then it a lot of times it tells me, hey, maybe the crowd's a little bit too involved, emotionally here. So I look at it in terms of just being objective. I know my process. I know I'm going to honor my stop, and the market's opinion is the only one that matters to me. It's me versus the market. It's not me versus anyone on TV or anyone on Twitter or any individual. It's the collective psychology of the participants that we're trying to interpret on these charts to gain our edge and provide us a place where we can find a low risk entry and have, what looks like your perceived low risk entry, get involved in a trend and let the market tell us whether they're right or not, or right or wrong. And if I'm wrong, I'll get stopped out, and that's it. I don't need to argue with people. I don't need to hear their side of the story. I don't need to, read an annual report. It's the purity of the way I approach the market that allows me to just block all that noise out. To me, it just doesn't exist anymore.
Yeah, especially as you know, nowadays, when you look at it, like Twitter, for instance, everyone is perfect. There's no mistake. No one makes, all the accounts are up. They never go. There's no drawn down. That's for all traders.
Right.
So sometimes when I see that and I see the reality, is completely different because you have to be flexible. You need to accept when you're wrong, as you said, which is the stop loss, didn't go the way that you wanted. So that's why you had the stop loss. So for you and all this transition, accepting that it was an issue at the beginning, or it's been consistent since the beginning?
No, it was a big issue in the beginning, actually, that I would, listen to CNBC, and I would listen to when Dan Dorfman would come on and tease a stock. And then Joe Kerning used to do it too. I used to call him the Riddler, because he would say, well, coming up after the break, we're going to talk about this stock in the solar industry. And I'd, frantically be looking for it. Then if I couldn't find the symbol and try to front run it in front of that, he would say the name of the symbol. I'd jump in like an idiot, and then, it would fade against me. I'd lose money. So I got tired of losing money doing stupid things, listening to other people, and instead focused on honing my trade, which is looking at the charts, trying to understand where my edge is, and that is in finding the correct entry points and also having stops and honoring those stops. If I'm wrong, then I don't have to justify anything. When you say there's a lot of people on Twitter that, no one does anything wrong there. I try on anytime I mention a stock on Twitter, I always, put a chart on there and say, here's where my worst case stop would be. And, that's it. If it goes down, I get stopped out, it's going to be, 2-3% or something like that. And if it falls 50% after that, no one can come back and say, hey, Brian, you got me involved in this stock and it's down 50%. I used to see that happen, that I would mention a stock, and then 6 months later, someone would say, hey, Brian, I'm still holding this stock based on that tweet. It's down 50%. Should I buy more? And I'd be thinking, what are you talking about? We're trading something, and a lot of people, if I can just go on a tangent there, is that people need to understand their time frame. I'm very clear that my time frame is swing trading. And, I'm not interested in where Bitcoin will be in 5 years. I'm interested in the next week, the next 2 weeks, in holding those types of trends. And sometimes I'll hold them longer, but it's just, you've got to understand who you are in the market and try to filter out that noise as best you can. I think you brought up a great subject there.
Yeah. So before we jump into the presentation that I'm excited to see that you have for today, let me ask you this one more thing. So supply and demand sounds very simple game, but it's not. How change your view of supply and demand before getting your CMT designation and after you getting your CMT designation? Is something had changed in your view of the markets?
I think it's kind of coincident. I don't, I love the CMT and everything I learned there, and just honing being exposed to more techniques of analysis. And then, when you're in the CMT, you're given, the fire hose basically. You have, point and figure. You've got the candles. You've got Elliott wave. You've got all this information to take in, and a lot of people get intimidated by that, but what they need to do is say, okay, now I'm going to take this body of knowledge and figure out where I fit in. It's like learning about football or something, and you find out you're a running back. It's good to know all the other stuff going on in the field, but you've got to run and avoid tackles. That's your job. So it's good to be aware of all that stuff, but then you need to get down and really specialize. And what I've specialized in is multi-time frame analysis for swing trading, and supply and demand is best measured, as we'll see, I think, with the anchored volume weighted average price. And that's what we're going to talk about here.
All right. So let's jump in. You have the presentation. You can show us.
Yeah, let me and we are here to talk about the volume weighted average price, and more particular, the anchored volume weighted average price. And when I talk about the markets, I always like to start off with, the cyclical nature of the market. And, basically you've got to understand market structure before you can ever get involved in anything else. To me, it's pretty simple. Stocks and uptrends are candidates to be bought. Stocks that are going sideways, to me, are in a void. And stocks and downtrends are candidates for a short position. Now, we can get down into nitty gritty and using multiple time frames, but that's just something I always want to start off talking about. Most people will have a moving average on their chart, whether it's a simple moving average where the last 10 days divided by add up and divide by 10, or an exponential moving average. To me, simple versus exponential, it's really kind of irrelevant. They're going to be in the same place. The way I use a moving average, and the volume weighted average price is represented like a moving average. The way I use them isn't to say, okay, the stock pulled back to the 10-day moving average or the 20-day or the 50-day. Now I'm buying it. It's not that simple. That, to me, it's about, okay, it pulled back to the 50-day moving average. What's going on here? There's a potential shift in supply and demand in this area. Why is there a potential shift in demand? Well, supply and demand. Well, because as the stock pulls back to that rising 50-day moving average, people who were taking profits look at it and say, hey, now the stock is at that rising 50-day moving average. I'm going to stop taking profits because it often acts as support. So that's less supply. And then you have, this big institution that has a position in it, and they say, hey, we're going to add to our position at the 50-day moving average because it's usually support in there. Or they might say, hey, we're the big owner in here. We're going to create support in there. We're going to stick a bid in there that's so big that other people start to bid with us, and we scare the sellers and they stop selling. Think about the short sellers. Short sellers are going to say, I don't want to short there at a rising 50-day moving average. That usually acts as support. So it's this collective psychology. If we think about what's going on at a simple moving average, an exponential moving average, or the volume weighted average price. So to me, there are a level of interest. We've pulled back to this 50-day moving average. I'm running this scenario in my head, who's buying, who's selling. But it's not just that. Then it tells me we're at this level of interest. That means focus on a shorter term time frame to see if there's actually evidence that the buyers are gaining control. If it just is continuing lower, well, there's no reason to be a buyer, as it's pulling back. I'm not a fan of the phrase buy the dip. I say buy strength after the dip. So once it's settled down and proven that there's that there's buyers in there, enough buyers to over whelm that supply and create short-term support. Now I want to look at it on a shorter-term time frame and see if it'll move away from there. Well, the volume-weighted average price is no different. It blows my mind how often a volume-weighted average price level will be the exact turning point in a stock or in crypto, and you'll see that, but to me, it says drill down to a shorter term time frame. So what the volume weighted average price is, real quick, is it's what I say is the perfect combination of price, volume, and time. And those are the three most important components in the market. Price, only price pays. It's how we keep score. It's what we were talking about earlier. Am I right or wrong? Well, price action tells me that. Volume tells me the emotional intensity level of the participants. Are they in a big hurry to get out? Is the volume really accelerating to the downside as it hits that 50-day moving average? Or is it slowing down a little bit and saying, hey, there's not a big hurry to get out of this stock? And then time, again, is subjective. When we look at, simple and exponential moving averages or any time-based moving average, that's periodic versus the volume-weighted average price is episodic, meaning we can put it from any point in time, and we'll talk about where we want to do that and how we do that as well. So a real quick background that I'm sure you're familiar with, Juan, is, it started out as an institutional benchmark for, to say, are my orders as an institution being filled in a fair way? Am I getting a good price? It was created in 1988 as a way to determine how does an institution know if they're getting a good deal on their purchase or a bad deal. So it's developed over the years, obviously, and now there's a lot of algorithms based around volume weighted average price. Speaking of Jay, when I went down to the floor and talking to Jay once, he was saying, Brian, look at what they're talking about, that all of the brokers who would come and ask for an indication on a certain stock, they weren't asking about price. They were saying, what's the volume? What's the volume? What's the volume? The pre-market volume, because they wanted to set their VWAP programs to be representative throughout the day based on how that normal volume pattern goes for that stock. They weren't interested in price. They're only interested in volume, which to me is crazy. But they're only looking to be as good as the average, basically, for these programs. That's what they're doing, is they're trying to buy.
I have a conversation with Peter Tuchman. He's the Einstein of Wall Street, or people call him like that.
Okay.
He mentioned that we're always looking for what's the VWAP, what's the volume, because that's what most clients also will ask you. So that's a conversation between the customers and these guys, the market makers.
Yeah, I mean, to me, it's crazy because, again, only price pays. And that creates, though, Juan, that creates a great opportunity for us who can interpret this and say, well, it looks like the institutions are buyers throughout the day, and they're going to defend that volume weighted average price on pullbacks. And we can look to see, when the stock pulls back, it often holds as hidden level of support or resistance. The easiest way to really think about what the volume weighted average price is it's the and actually this is the best way to do it. Forget that slide for a moment. I should have taken that off. But it's basically a dollar cost average. So if you were to buy $1,000 worth of Apple on the 15th of each month and the stock was $199, well, you would buy 5.02 shares. When the stock drops to $195 and you put $1,000 in, you'd buy 5.25 shares. But when the stock is $235, your $1,000 only buys you $4.25 shares. So what we're doing is we're saying we're buying $1,000 worth, but what is our volume weight, our dollar cost average? So this purple line shows the average price for volume. So at the end of this 6-month period, we've made 6 purchases of $1,000 each. The stock is now at $235, and our average cost is $206.60. That's our volume weighted average price. That's our our dollar cost average. That's the best way to really, think of it for someone who's not familiar with what the concept means. So what we often see is that in short term, in a market that's declining, the volume weighted average price will offer resistance. As those programs say, hey, we're getting back towards that fair value. We got to get rid of this stock. We have orders to sell. Just the opposite, when a stock is in an uptrend, you'll often see that the volume weighted average price acts as precise support during the day. Doesn't mean you're going to buy exactly at that level. Not for me. I'll look at it there and I'll say, it looks like it's bouncing, it's finding buyers. Now, if I want to buy, I want to buy right here when there's, buyers confirming that it broke above this little consolidation. If I'm a day trader, I can buy right there and set my stop underneath this little low. These are low risk ways to enter. Again, we're not looking at it in terms of, okay, I'm going to buy the first touch of that volume weighted average price, but now I want to study and see what happens. Are the buyers in fact defending this and absorbing the supply that's come in for this profit taking? And in this case, it did. So the rising volume weighted average price often acts as support. So just
the previous what time frame is the previous chart?
Those were both 1 minute time frames. So those were just, and that's the traditional volume weighted average price is for 1 day. Okay. So if an institution wants to buy 100,000 shares of Apple today, they'll go to their broker or turn their VWAP program on and say, here, we're going to buy in little increments throughout the day. And they might have a 5-minute window where they break it into, 5-minute windows throughout the day, or they might do it in 30-minute windows, 30-minute windows, and say, we're going to, the first half hour of the day, 20% of the volume trades. And I'm making these numbers up. So we want to buy 20% of our 100,000 share order in that first half hour period. And they'll, look at the VWAP for that time. And then throughout the day, they'll fill according to how the volume typically trades for that stock, which again, going back to what I was talking about, Jay saying is they wanted to know how much of the, what percent of the average daily volume has already occurred, because they need to dial in their VWAP programs to make sure that they're in lockstep and they don't get too far behind in executing that order, that they want to just kind of do it average throughout the day. So just like any moving average, you want to look at it and say, what's the direction? If it's rising, it says money's coming in from that for that time frame. If it's declining, well, money's flowing out. Don't be a fool and try to buy this stock, because on average, money's flowing out of this stock today. Especially when we consider the slope. If the stock is below a volume weighted average price and the VWAP is also declining, just better off staying away from it. Let it settle down. Let other people create the support. You don't have to be the hero. If it's flat, and the price is moving back and forth above and below it, to me, it just means avoid it. So it'll often find, here's, just a case of a blue is the 50-day simple moving average. And you can see the prices move back and forth above and below it. The black is going to follow closer because that's the exponential moving average. But the VWAP from the high, you can see, if we measured off of that, became perfect resistance here, almost perfect resistance there. Now, maybe becoming resistance again, or it's starting to flatten out. So it shows us with more clarity. Someone might have been saying, hey, I'm going to sell if it gets the 50-day moving average. Well, it never got there. There was a VWAP program from the peak instead. And you look at this and say, are there actually programs like that? And there are, because if you think about, institutions that have their investment management committees every 3 months, they say, hey, for the next 3 months, we're going to be selling XYZ stock. We're going to go from a 2% position, might be 3 million shares, 2% of outstanding shares, down to 1.5% of outstanding shares. So we're going to sell that over the course of the next 3 months or even 6 months, and we're going to put that VWAP program. So if it gets up to that VWAP, we're going to be sellers there, because that's a good place to do it. Now, the volume weighted average price pinch, what occurs here is, and I created these for the chart summit a while back. We'll talk about some examples that are set up actually for tomorrow in a moment. But this stock, if you look at it and put a volume weighted average price from this low, so it's great to anchor from swing highs and swing lows. So if we take it from that low, you can see that it's finding buyers in that area. So it's being supported by this volume weighted average price for whatever reason. And then if we take this portion of the chart and we say, what about from the peak? Well, when it peaked, we don't put the volume weighted average price on it that day because we don't know that that's the peak. Instead, once it starts to decline and breaks down, we say, well, that was an important swing high. Put the volume weighted average price on that. It offered some resistance here. It offered resistance there. Now, when you combine the two of them together, we start to see this equilibrium forming where we're getting a convergence of energy, a spring coiling up in here. We had this big up move. We had a corrective wave. Now, in between, we're waiting for the buyers to reaffirm their dominance because the longer-term trend is up. And as we know, the longer term trend is more likely to continue than it is to reverse. So we give the benefit of the doubt to the buyers. We're not just buying at this VWAP though. We're saying if it can make a higher high above that volume weighted average price from the peak, it tells me at that point the average person, the average participant on the long side who might have been dollar cost averaging is now break even here. The average short seller is now losing money. So we get that, again, it's the psychology of who's in control, who's buying and who's selling. Here's one that was an Apple that I put on Twitter earlier in the year. The volume weighted average price off of this low, you could see was acting as perfect support. And then off of that peak, we saw the supply coming in. And I had put it in here saying it looks like it's getting ready to go. I'd sketched in what I thought would happen, and we saw it move nicely above there. So what we can do is we start to establish our plan and say, I want to buy above this little peak right here, and then set my stop underneath the most recent relevant higher low. So in that case, it would be just underneath this level where we see the buyers have defended, because if it breaks back below that, it tells us now the average participant from this low is losing money. They're not going to feel as good about it. Shorts might come in and attack the stock and push it lower. So we're in a waiting zone as it pinches, but we're anticipating, and we wait for price confirmation before we participate. So
that you're waiting for the setup to complete. So it's like sometimes traders anticipate when it's in the middle of the setup, and that's one of the mistakes that they make. So
what we want to do, so here's one that was, this was a really successful IPO, and this stock has gone on to do great things. But this is one I had also put on Twitter as an IPO. We saw that initially it broke below the volume weighted average price from the IPO, and then the buyers were defending it, and it underwent some profit taking. So I said, I want to buy it above this little band of resistance here as it retakes that volume weighted average price. And it did it. And then the stock went on to go, 150 so %. I didn't hold it that long because, again, I'm a swing trader, but I traded it several times throughout there. But the point is, especially for an IPO, from the IPO is a great place to measure from because everyone has the same starting point. There's no there's no art to that, setting that volume weighted average price. What's the average price since the stock began trading publicly? So here's another one, Coursera, that I was looking for the pinch to develop. The pinch was developing, and I'm not going to buy right here at this volume weighted average price. I'm going to wait for it to consolidate, to get back above this peak, and instead, guess what? It didn't work. So what? It's just a setup. A lot of people look at these and go, wow, Brian, that one sucked. No, it didn't. It didn't set up. You didn't lose any money. We're just waiting. We're anticipating. We're in anticipation mode as it's pinching, and we participate. Now, maybe you had the ability to short this stock. I didn't try to, but I know I wouldn't have had the shares available to short. But that's the other thing, is that at that point the sellers from the IPO were in control. So we see that it can be a great way to short as well. Here, this was Litecoin, and Litecoin had been in a nice uptrend. The volume weighted average price off that off that peak, you can see offered resistance, and then kind of battled back and forth. It got back above it and then went on to be a real nice winner. So what we want to ask ourselves is not just buying above these volume weighted average price levels, but to say, where has it come from? If it's expended a lot of energy getting to the trigger point already, a lot of times I'm going to avoid it, or maybe I'll just trade it in much smaller size, because now, you know, where is it in relation to on the long side, what I call the most recent relevant higher low. If it's extended away from there, I know that my stop has to go underneath that level, so I'll adjust and you know, do maybe a half of a risk unit instead of a full risk unit. And then looking at it and saying, well, where does it have the potential to go before it might encounter supply that becomes resistance? That's the basis of our risk reward. That's our planning. You know, when it's in that pinch, we're looking at it and saying, okay, if it sets up in these ways, you know, I'm not going to be taken off guard. I've got a plan. And this allows us to objectively say who's in control from any point in time, from that peak where the stock began to pull back or from the most recent low. So let me go and stop sharing this for a moment, Juan. And what I'll do is, and feel free if you've got something else you want to talk about there while I'm doing this. But I'm gonna pull some fresh charts up, and we can look at those.
Yep, sure. Go ahead.
Okay, so here's one that I had given tonight to Alpha Trend subscribers as a potential trade for tomorrow. You can see that Extreme Networks is in an uptrend. It's, you know, real nice uptrend. It pulled back to that rising 50-day moving average, had a nice rally. And now if you kind of even look at this on a 30-minute time frame, let me just move our faces out of the way. You can kind of see that even here, just traditional, is this a shoulder, you know, and then a head and a shoulder. So is this an inverted head and shoulder pattern? Great, that's one nice piece of information. But what I really want to look at is from that last peak, who's in control? The buyers are in control. From this low, who's in control? Well, we saw that the volume weighted average price from that low was touched here. So we'll draw another VWAP off of that. And then that is where we saw the buyers just recently step in front of that. So now it began its pullback. And what we're seeing is the volume weighted average price off of this peak here is now flattening out. So when I look at this stock, my plan is I want to buy it above today's high for a swing trade. And this is a 30-minute time frame. So where are my notes? Just so I don't have to look at the numbers right there. I want to buy it above, this is 11.59. And then my stop is going to go down underneath this little low right here, today's low, so 11.08. So I want to buy this as a swing trade above 11.59 with a stop of 11.08. Now, it's not the best setup, so this is what I consider a half a risk unit type of setup. One that I like better is when I've got involved in this one today, PBF. This is.
And how do you measure your targets?
That's a good question. And you know, the truth is, I look at previous highs and say, do I think it looks realistic that it's going to get to this high at least? It looks like if it gets through there, it should continue higher. So I'll look further to the left on the weekly time frame, and I'll look at it and say, you know, if that's the point that we looked at on the daily time frame. To me, I look at the next, you know, important peak, which was right here, and that's kind of my target. But I really don't use price targets, Juan. To me, it's more about risk management. And I say, because the trend is higher on the weekly time frame and on the daily time frame, and it will be higher once it gets above this level, those trends become aligned. I'm most interested in my risk. So I'm giving the benefit of the doubt to the longer term trend, which is higher. So if it then, you know, does this, rallies up, pulls back, tests that, and then goes again, well, then I'll immediately raise my stop to right here, as close to break even as possible. So to me, it's about, does it look like on the weekly time frame it can continue to move higher? And it does. So I'm not going to say I have a price target. The problem with price targets, and I used to have this problem, talking about noise, is that I would hear people come up with price targets. And let's say someone said, hey, the price target is $15 per share. Well, if the stock does this, and breaks down and makes a lower low right here, and I'm still holding for my $15 price target, to me, I'm not interested in that $15 price target. It didn't hit it. Instead, I'm listening to the message of the stock. And if it's making higher highs and higher lows, I'm going to trail my stop up underneath those successive higher lows. And I'm going to listen to the market about when to get out rather than force my beliefs on the market that it should go to 15. Because if my belief is it should go to 15, I might round trip this stock. And to me, that's unforgivable. If I get in a stock and it goes 5%, 10%, 15%, 20%, and then falls short of my target, and I ride it all the way down, I'm an idiot in my mind. That's just unforgivable. I need to listen to the message of the stock. And, again, that would look on a shorter term time frame like this 30-minute. It would look like, here's what I'm looking to do is, if it does something like this, well, my stop would then, at this point, I would raise my stop up most likely under here. And then if it continues to rally like this and create those higher highs and higher lows, well, I'll continue to hold it. But if instead it breaks down, my price target didn't mean anything. I want to take this portion of the profit and just get out, whether that's 3% and I'd make that in 2 days. That's a good trade to me.
Yeah, that means you're using trailing stops to probably measure using the risk.
Yes, and I want to use the definition of trend, higher highs and higher lows. I'm involved because the long term, the weekly trend is higher. So what's a low risk way to get into that weekly trade? Well, then I look down to the daily time frame, and I didn't get involved down here. So I'm looking at the stock saying, we're back above the volume weighted average price from that most recent peak. It tells me that there's buyers regaining control. The definition of trend, higher highs and higher lows, to me, this is the most recent relevant higher low. That's my initial swing stop. So I'll set my stop under there and then trade and then size my trade according to that. And then I'll look to see if the market continues to say, hey, this is a good idea. Or if the stock instead does something like this, where it breaks above that volume weighted average price, and meant to clear that off. If it breaks above that volume weighted average price and I get involved and it does this, well, I want to be out here because the definition of this emerging trend no longer exists. Higher highs and higher lows. Well, it made a higher high over here, but if it makes a lower low, I don't want to be involved. I mean, it's really simple. It's the definition of trend. Some people will use 5% stop, 7% stop, or some random number, which is better than no stop at all. But 7% stop. Let's say I'm just making this. So let's say that was 7%. Why wait for it to go all the way down there when I know the definition of trend is violated here? I want to be out when. Because I'm trying to be disciplined. I'm trying to be objective about this. And a trend once established is more likely to continue than reverse. We've got to give it some wiggle room right from the start. But if it fails, I'm certainly not going to buy more and say the market is wrong. I'm going to justify it based on, hey, well, it's now at the 20-day moving average. I guess I'll buy more there. That's not my game plan. My game plan is, the fine tuning of the stock is on the shorter term time frame in terms of where do I want to really enter this stock. Another one for tomorrow is CARG. If we look at this one, it's kind of messy on the weekly chart, but it's got room to run. It looks like. So on the daily time frame, let me just back this all up. On the daily time frame, this blue one is a year to date volume weighted average price, and you can see it's holding that very nicely. We've got a rising 20-day moving average. We've got a rising 50-day moving average. If we look at the volume weighted average price off of this peak right here, from the highest point that anyone's owned it this year, the buyers regained control over at this point. Well, I wasn't watching it that day, but now I see this consolidation, and you can look at this consolidation and say, hey, isn't that a nice little pennant right there? Great. We can use, and that pennant was formed the way we want them to be formed. A big volume on the up move, lighter volume on the consolidation. So it's not all this stuff together. It's supply and demand. It's trying to make it as simple as possible. But I look at it and say, from this peak, who's in control? Well, we're back holding above that. From this ignition candle, we're holding above that. Now it's been a little bit sloppy. They're not always going to be perfect. But to me, again, as a watch list idea, if it gets back above this high tomorrow, I think there's a good chance we see it break out of this pennant. So I'm looking inside. It's always about multiple time frames. So if it breaks above that high, well, where's the most recent relevant high or low? Right around in this area. So that's where my stop goes. What's my price target? My price target is higher. But what's realistic? Where does it realistically look like it has a potential to go? This prior band of support probably has some people trapped who might be looking to get out even. And from that gap, who experienced that nasty gap. So in here, I look at it and say, it looks like maybe it could go to 31, 31 and a half. And what's my risk? My risk is a point or so. So if I'm going to, make maybe 3 points, and I've got a 1 point risk, well, that's beautiful. That's what we look for, a 1 to 3 risk reward. So it's all about, again, who's in control from this peak? Well, the sellers were clearly in control for a while. There's no reason to buy the dip if you want to buy the stock. If they don't scare you out in this decline, well, they would have warned me out. This is 2 months of going sideways below the declining 50-day moving average. Something happened, most likely earnings. The crowd changed their opinion. Price, volume, and time. Price ignited with huge volume, it consolidating on the shorter term time frame in this range on lighter volume, and we're getting that confirmation from the volume weighted average price that the buyers are once again interested. So the better one I have for tomorrow, I guess, is Casper. This is the mattress company. And these guys came public. Here's the volume weighted average price from the IPO. It was a rough IPO for them, but that volume weighted average price is now flattened, not only flattened out, let me remove this one, but it's also starting to advance a little bit. And you can see that it found buyers at that level 3 weeks ago. So if we look at that on the daily time frame, average daily volume is 1.1 million shares. This prior resistance right here, this prior peak, it looks like it's about to stair step higher. This resistance finding support right at a rising 20-day moving average, which is also a nice clue. It was up on big volume. It's consolidating on lighter volume. So now let's look at a shorter term time frame. And in this case, if I get involved, my first price target would be up here, and I would absolutely sell some on a breakout of that level. If this was to do what I wanted to do, which is something like this, I would absolutely sell some there to the breakout buyers. Because a lot of people are trained by the breakout over here. But to me, it's more about it just rallied from 9 to 11. It just rallied 20-something%. I want to sell some into that. People say, hey, breakouts don't work anymore. Well, it's because you're chasing a stock that's already moved, and the smart money is getting involved down here where it's lower risk. Here's a third, let's look at the 15-minute time frame. So here on the 15-minute time frame, well, this was clearly an important point, this peak right here. So if we look at the volume weighted average price from that high, right now, there was a little fake out over here. I wasn't watching it then, fortunately, or if I was watching it, let's just say, I would have wanted to be involved right here with a stop under here. And I would have been stopped out.
Yep.
And I would, if I wasn't stopped out, well, I would have wasted 2 weeks sitting in this stock waiting. But I can always get back involved. And now is it setting up in a lower risk way? Let's take a look. We can see the volume weighted average price from that peak has been sold into numerous times in the last 2 weeks. Today we came back up to it again. And I like to look at to see a flat to rising 5-day moving average, which will rise when we get rid of this data tomorrow morning and average it into the calculation. So in other words, I want to buy it above this peak here today with a worst case stop just underneath this low right here. So that low was today's low, which when we look on the daily time frame is the basis of, well, that's where it touched the 20-day moving average and found buyers. So it's putting all these pieces of the puzzle together and saying, from any point in time, who's in control? Since this gap, the buyers are back in control. It got a little sketchy in there. They took back control, and we can do this and say that that prior little peak, you know, the volume weighted average price showed us the buyers regained control right here. Well, that also, you know, coincided with the break of that little near-term resistance. And now tomorrow, hopefully, we see it do the same thing again, that it gets back above that level. And then once I'm in the stock for a few days, if it does what I want it to do, I'll also put a volume weighted average price off of this low and maybe start to trail my stop up under that as well. So that volume weighted average price will start to move and look something like this. So it'll give me a little bit of slippage maybe underneath that low, and we'll see, you know, and so I want to put it underneath the low, that's below the rising volume weighted average price from the event. The event is it started moving higher again for my time frame. So I covered a lot there, Juan, and it's you know, you can see it's not just multiple time frames, but it's who's in control from a certain point in time. So I don't have to waste my time waiting for this pullback to exhaust itself. I don't want to be the first guy in saying, hey, it's overdone, I'm emotionally connected, and buy it on that day and still holding it 2 weeks later. And at this point, maybe I'd be, you know, tired of it and looking to get out and break even right before a move might emerge. Or it might get me involved and do this tomorrow. And guess what? That's part of trading. I'll take that loss because my upside, I think, is at least towards this level in here. And it's not really a target, but it's a level of interest where I want to say, okay, as it gets towards that level, I'm going to tighten my stop a little bit, at least on my first piece, because if it gets rejected, I want to be quick to take some off to reduce my overall risk and make sure I don't give the whole damn thing back.
Yeah, no, I agree. So do you have by any chance, the Bitcoin charts over here?
I can pull that up. I thought you might ask.
Yeah.
So
wait to see your analysis, because this is fun and very interesting.
So first I have Ethereum, and I'm putting that on there simply because I posted this, you could on Twitter the last couple nights. So this is 2 hours. We can make it a daily, which we'll do in a minute. But this is the peak in Ethereum. Oh, I'm sorry. Yeah. So this is the peak in Ethereum right here.
Okay.
Was it 4,300? Yeah. So anyways, it's pulled back down under 2,000. And we saw the volume weighted average price from the peak. Well, look at what's happening here. Do you think it's a coincidence that it's just rallied from 1,750 to 2,800? So it just rallied 60% in a matter of a couple days. And I look at it and say, where, you know, it's at a level that's becoming resistance. So it's working its way, you know, it's working that through there. And what I'm trying to do is, I'm not as good at drawing on this platform as I am the other one, but you can see there's clear resistance there. Now, the other interesting thing, Juan, is that when we saw this big volume sell-off, once it started rallying up over here, I put a volume weighted average price on that low. Look at where the low was, almost to the penny. I mean, this is not a coincidence that 3 times in the last 3 days, it's hit that level and sellers have emerged. So we can do the same thing with Bitcoin, which let me do. So there's a, let's make this a 4-hour chart so we can see more of the data. And here's the volume weighted average price off the peak, and then off of this breakdown. Now this one, you know, sometimes you'll experiment and say, where are the sellers emerging? And what I should have done is actually drawn it right here, the peak prior to that decline. So you can see that from this event where it broke down hard, the sellers defended that level here, and they're defending it just below as well. So again, it's not meant to be a precise level, but you can see it's pretty precise in this area right now. And the volume weighted average price off of this low has been where we found the buyers a couple times. You can see it actually with more clarity on the 2-hour time frame. I always like to go as the lowest time frame possible and create it on there. But it kind of gives us, when we do it like that, here's a band of support. Here's a band of resistance. So what I want to see occur in Bitcoin is either it continues. And again, I'm not good at drawing with this, so I'm not going to even bother trying to draw. But it'll, either work its way through that supply and then maybe go up towards the next important volume weighted average price, which is the one from the peak. So it might emerge as a low risk setup above this band of resistance. And in this case, I would be looking at a price target objective, maybe around that 47.5 level, and keeping in mind that that will continue to decline. So that by the time it gets there, it might meet up at about 45.5, 46 or something like that. And I would definitely take some off at that point. But look at how these pullbacks have provided really strong entry points. The interesting thing was that I had a bid in this day at 31,000 even. The low was 31,100, and I think the low was 30,110. And I've still got that bid in there just because I like being annoyed seeing I was that close to the low. I don't know why I keep it in there, but we see the picture of supply and demand. So from this event, the buyers are trying. The shorts. Are they defending that in there? Are the buyers, saying, hey, we're selling some up in this area? Or will we see that as it pinches between here, it flips, the buyers regain control, and we make a quick move up towards this next level? So I will buy strength if that's the case. I'm kind of leaning towards hoping it doesn't do that yet. Instead, we see another flush lower. But anyways, that's the way I look at Bitcoin and Ethereum right now.
No, it's supply and demand. It's about probabilities. As we know, it's 50%. And I like to.
And while we're in the middle here, cash is a position. There's no reason to do anything. If you already have your position on, then you know where your stop is, or maybe you're just hodler. But to me, looking for a trade, it says something's happening here. I don't have an advantage being involved in the middle of this pinch, so I'm just going to wait.
Okay, sounds good. So could you show us, so people that are going to understand more about your analysis, could you show us your book here? The people that can.
My book. What's funny is my camera's going to drop just slightly because it's sitting on a pile of books to get it to the right level. So it just dropped one book down. There's.
Oh, okay. Here we are.
So I've got a pile of them underneath this. Technical analysis using multiple time frames, and that's available on Amazon.
All right, so people can buy on Amazon. So I encourage everyone to get a copy of this book, and it's been relevant. When did you release this book?
I wrote it in 2008.
Wow, it's been a while, right? But it's still very relevant, so people can. That's the beauty of when you were working on this book. Probably did you know it's going to be as successful as it is right now, or you just?
I had no expectations. I really didn't know what to think. I put my spin on what I had learned through the years, and to me, I wanted to write it in a way where it made sense to somebody who didn't have an understanding of technical analysis, but I also wanted to add value to people who had some knowledge in technical analysis. The truth is, I wrote it, hoping my kids one day would want to read it and learn from it. And I didn't want to bore them with a lot of technical jargon and boring, textbook type stuff. So I wrote it in a pretty easy to read way. And that's really, I think, what's helped it maintain, its success is as far as still being a book that people talk about and recommend to other people and read. And so I was fortunate the way I wrote it for my target audience of my kids.
That's good. And also, how can people follow up your ideas? Do you have like a subscription?
I do on alphatrends.net, but the easiest way, the lowest drag way to follow me is on Twitter.
Okay.
I post free videos on there. I post trade ideas, with stops, of course. And I never put price targets on there, but I put stops in because risk management truly is more important than, trying to figure out how much money you're going to make. The market, they say the market takes care of the winners, and to a degree it does. But you still have to manage them and raise those stops and and manage the position. You can't just put it, you can't just put the trade on and say my price target is this. I'll put a sell signal in there and wait for the market to do its magic, because the market doesn't care what we think. We have to manage it along the way.
Yeah, so I agree with that. So those most, especially young generations with cryptos, that they put like anything, and it's just gonna go to
hopefully this volatility is teaching them a lesson that they can't just buy and hope and hold and not have a strategy, not have a plan. So we all learn the hard way.
I think with what happened with this what's going on with the downtrend with coins, I think over 700,000 accounts were wiped up for margin accounts.
I saw something to that effect. Yeah.
And there's man, you better pay attention what you're doing. So you're gonna use leverage, you're increasing your returns, but also increasing your risk. So it has to be as you said, the balance. So understanding not only the charts, but also putting into practice all the risk management tools available.
Yeah. Well said.
All right, Brian, I do appreciate your time today.
Thank you.
Yeah, I really enjoyed this conversation, and I hope to see you next time. Anytime.
Yeah, we'll see you at the next symposium in New York, hopefully soon.
Oh yeah. That's this one was online, but for sure, because you're in Colorado, right?
Yes.
Okay, but I hope to see you in New York next year for sure.
Sounds good. All right. Thanks, Juan.
Thank you. Have a good day.
You too.